Hey insiders, welcome back to the channel and thanks for watching today's video. If you're new to the channel, Arizona Small Business Insider is all about supporting local small business. So please consider hitting that subscribe button and liking this video. Today we have a returning guest and his name's Jon Edwards and he's with Edwards Wealth Management. Jon's a certified financial planner and a retirement income certified professional that brings over 10 plus years of experience. Now since Jon was first on the channel back in January, you guys, a lot has changed in the stock market and in our economy. I know this is something you're all aware of, so I wanted to have Jon back on to provide some much needed up-to-date insight. Jon will be covering the overall state of the stock market, tech stocks, 5G stocks, investments you may consider avoiding, and precious metals. If you have any questions related to the stock market, make sure you pick up the phone and call Jon. Jon works with everybody, people that have never invested in the stock market and seasoned investors. So let's go get updated. How are you?
I'm great. Thanks for having me.
You're welcome. So Jon, the current state of the stock market.
Well, we've had, the economy has contracted a lot here. A lot of people are out of work, but the market, it's not always reflective of the economy. And since March 23rd, it's up about 30%. So, you know, there's a lot of debate whether or not the bottom has been put in or not. And there's some really smart people on both sides of that argument. However, once we've retraced 30%, it's unlikely that we'll go all the way back down as much as we did in March, though it is possible. You know, the real question right now is the stimulus that the Fed and the Treasury have done, is that sufficient for the hole in the economy? Or did they overdo it or did they underdo it?
So when do you, as it relates to the stimulus, when do you think we'll have a better idea of if it was effective or not?
I think it'll absolutely be effective. The question is whether they overdid it or not, and they may have. Right now we think that, you know, the stimulus, which is on the order of $6 trillion, it's about equal to the hole in the economy, but that remains to be seen. You know, if we're bouncing back quick, the stimulus could actually, you know, it's possible that we get back to all-time highs in another month or two, believe it or not, which is crazy when you see, you know, how much unemployment there is. So the market, you need to remember, is it's always forward-looking. So it's trying to discount cash flows from the future into the present and get an idea of what they think is going to happen. So, you know, a lot of this rally has been on hope, and a lot of people think it has been overdone. And it is quite possible that we do go down a little bit and get a better entry point.
I mean, wouldn't you say, though, with the stock market dipping, that it provides some opportunity for buying stocks?
Yeah, and for the average person, you should just continue to contribute to your retirement plan like you normally would. And if you have extra cash, you know, if it feels really terrible to put it in the market, that's probably the best time to do it. My experience anyway. A lot of things are working, some things are not working in the market. I must say the sorts of business models that are working now are the same things that have been working for a while. Investors have flocked to the stocks of internet companies, the big tech companies, Facebook, Amazon, Apple, Netflix. You know, all these companies continue to do well in this environment.
And why do you think those tech companies are thriving right now?
Well, you don't need to leave your house to use them. So if anything, in a lot of cases, their services are being used more and more. I mean, think of Netflix.
That makes sense. A lot of people on their couch, not leaving the house, going to movie theaters right now.
Yeah. But this is a trend that's been in place for a long time. These stocks have led the market. If you go back to February, before any of this happened, or, you know, they were still a large part of the overall market, and that's just been exaggerated with this, with the comeback that we've seen.
Okay. Well, another stock that I've followed that looks like it's been doing well through this uncertain time is Tesla.
Yeah, Tesla. It's in a world of its own. So, you know, I think a lot of the traditional automakers could have trouble. I think Ford especially may have a lot of trouble. But they should really continue to focus on electric vehicles because that's where the future's at.
Yeah.
And I think Tesla's ahead of everybody else. You know, and they're coming out now with that little Model Y, the SUV, and that's probably going to sell pretty well. I see them all over the place, or the Model 3s anyway. I think things are improving, and the market is rallying on that hope that we're going to reopen. One sector that's hitting all-time highs that we've been a big proponent of for a long time are, I guess I would say, the 5G stocks. So this includes things like cell phone towers, data centers, e-commerce warehouses, fiber optics, outdoor advertising, you know, because when 5G gets fully rolled out, they're going to be putting little antennas on billboards and stuff like that, not so much big towers. But these companies, you know, their clients are people like AT&T and Verizon, or Amazon, Netflix, Google, you know, and this is mission critical infrastructure for them. So we've been investing in these for a while, and they continue to do really well, and they're safe, they have good cash flows, and they're going to continue to grow as 5G gets rolled out.
Well, what would you say would be something to avoid right now?
Well, I think it's pretty clear to a lot of us that retail is going to have a very tough time.
Mm-hmm. Well, I think, we just heard this morning with our governor, they're slowly going to be opening up retail, but with huge limitations for consumers to go in and buy whatever it is they're buying.
Yeah, and I think, you know, the consumers have changed their behavior, and some of that change is going to be permanent.
Okay.
So maybe, you know, you're an older person and you never bought anything online, and now you figured it out and you realize how convenient it is.
Yeah, people have been forced to try other modes of consuming whatever it is that they consume.
But in retail, there's been too much square footage per capita for a long time. And, you know, these leases are long, so it takes a while for them to divest of their properties. So it's just going to accelerate that a lot faster. There's going to be, the department stores especially, I think, are going to have a tough time.
Okay.
AMC was talking about bankruptcy, but I think they might be able to stave that off. But we'll see.
And what about your opinion on precious metals right now?
Well, gold has been one of the best sectors. I think that's largely a result of monetary policy. It's kind of pricing in the inflationary outcome rather than a deflationary outcome.
Okay.
So I think that'll continue to work. It's already gone up a lot. The other thing too is, you know, the Fed is committed to keeping interest rates near zero for a very long time, and that helps precious metals because if you think about it, as an investor, you're looking at different alternatives, and if bonds are paying next to nothing, as gold pays nothing, gold is a little bit more attractive.
That makes sense.
And also, stocks are more attractive when interest rates are lower as a result of that as well, because you can't go buy a bond and get as high a yield on it. So it's very interesting. I think it's good for investors to have a little bit in gold. You know, whether that number is 2%, 5%, or 8%, somewhere in that range, I think is a good hedge. However, it's never going to be as good as stocks. You know, it's stocks. You've got companies that are growing their businesses over time. It's always going to do better than a hard metal that's, you know, that doesn't throw off any cash flow.
Yeah.
But
well, something you said to me when we met back in January that has always resonated is get comfortable with the volatility of the stock market. So with our current landscape, would you care to elaborate on that a little bit more?
Yeah, I mean, if you want to be in the market, you need to be comfortable with some volatility, and it's okay. Things are going to move up and down over time. That's part of it. But if you look at it over long periods of time, it does really well. And there's nothing that beats the wealth generation that you get in the stock market. A lot of people think, oh, it's at the high. I don't want to buy in. Oh, it's at the high again. I don't want to buy in. Well, it's always at the high because it's going up all the time. That's the point.
Yeah.
So
and if you keep waiting for the new low, you're gonna almost price yourself out.
Yeah, you got to get involved. I think it's not a bad idea to keep a little cash on the sidelines for when we have, you know, stormy days like we have. We can take advantage of that, but get involved. You know, you need to get some stocks and get off the sidelines at some point.
So I'm sure there's some people watching that are involved or some that aren't involved and may have questions. So I will always point to you, John, for people to reach out if they have questions about getting involved in the stock market, how to be strategic with their money and what their options are. So you guys, I highly recommend you reach out to John. And he's always more than willing to take your phone call. So I'll put the phone number, John's phone number down below, and even try to scroll it right here for you guys. But give him a call, guys. This is a time more than ever where professional advice is worth having. Hey guys, thanks for watching the video today. With all the uncertainty in today's economy and stock market, having a trusted advisor is priceless. If you're in need, give John a call. Or if you're thinking what else is out there, make sure you give John a call. And until next time, insiders, I'll see you next Tuesday.